Hey everybody, what's going on? It is James here with Crypto Common Sense. I wanted to sit down today and shoot a quick video. I shot you like a 45-minute video about midnight last night, and I didn't get it edited, so I'll edit that and upload it maybe in a couple of days. It's kind of an evergreen video anyway. But I wanted to sit down and shoot this video because I've only been at my desk for about 30 minutes, maybe an hour today, and quite a bit going on in the markets, but also I've had a lot of private conversation, people hitting me up about stuff, asking me about charts, etc., and some interesting things going on in the Facebook group. So before I jump into the content, first off, hit the thumbs up button. Do it now so you don't forget. If you're not already a subscriber, make sure you subscribe to the channel. And of course, don't forget you can check the description for a link where you can join Patreon for just $7 a month. All right, we're gonna start setting some goals on Patreon. If I can get that up to say 500 members, I'll start developing some software that you all can use in your trading, and I'll get more detailed with the software in a future video maybe. I don't know how detailed I want to get with it, honestly, because every time I share ideas about software, somebody rips me off and steals the idea, and then I have somebody that comes out and beats me to market. But I've had some software in the past for crypto, and of course I've developed dozens of pieces of software over the last 10 years in my other businesses, so it'll be something cool. All right, so let's talk about, let's first talk about Bitcoin, and then we'll talk about some of their charts. So first things first, this is Bitcoin. It is a 3-day chart of Bitcoin. Bitcoin is doing what I thought it was doing for quite a while. It's ranging, here's your low down here, the bottom of your range, here's the top of your range. Threw a little wick above this all-time close, this all-time high close. I hate the way Facebook pops up private messages. Like I'm doing a video and boom, these private messages pop up. So yeah, it's trying to put in a double top right here. It's a potential double top. It's really just consolidating. If it breaks this neckline, double top at resistance, it's probably going to move back down at least to the midpoint of this range. If it can break through this, it would be very, very bullish in nature if it breaks through, especially on a strong volume. So that's something to watch for. There is a little baby divergence down here, so that's also something I'm watching for. But overall, I'm just looking at this as a range. I'm going to play it like I would any range, whether it's on a 3-day chart, monthly chart, or 1-minute chart. All right, so that's what I'm seeing on Bitcoin right now. So what I wanted to talk about was some of the stuff going on. We're in the mania phase of the market cycle, right? Where everybody thinks they know what's going to happen. I shouldn't say everybody, but a lot of people think they know what's going to happen. A lot of people are overconfident. A lot of people have been lured into the false belief that they can buy every dip and it will work out, that they can throw money at anything and they're going to get rich, etc., and that's just the way this market cycles work. So I posted up this post about 5 days ago warning people, not really warning people so much as just kind of using Shiba as an example of the way markets work and the way that markets get on my nerves, because you have gurus or whatever you want to call them, right, who are patting themselves on the back, about calls they made, etc. in the past. But the reality is like this here, okay? This is Shiba. There were people in May telling people to buy Shiba, and I saw some of those same people coming out, last week saying, "Oh, look at this great call I made. If you'd have bought Shiba, you'd be up big, blah blah blah." But not really, right? It's not really what happened, because from May, Shiba actually fell almost 90%. It was an awful idea to buy Shiba in May, right? It was a much better idea to wait for Shiba to bottom out, put in a buy signal, and then buy it either on the retest, a support down here, or maybe on the breakout over here. And if you'd have done that, you had a potential to make 1,000 or even 1,200%. It's a really good return. So what I said, and again, it wasn't about calling, it was simply saying that this stuff makes me cringe. And I went a bit further, I think, in a private video maybe. Yeah, I didn't put it in this post, unfortunately. But basically what I was saying is people tend to buy over here, right? They think they're going to get rich. Over here, they hate a coin. Over here, they're excited again. They're going to start buying again. But very few people are buying, the lows. Very few people are buying the accumulation phase. And it's just the way markets work. Well, here we are today, right? Just 5 or 6 days later. And if you look at Shiba, here you have it, right? Shiba from its top back here in October, now down 53, well, not now down, but it dropped over 53%. And here's the crazy thing about the mania phase of the market cycle. You ready for it? This right here. Okay, 20% loss, but a 1,000,000% increase in a year. If you just bought, yeah, for most of this, we're still looking at well over 10,000% increase. That's bullshit. Whether he's looking at 10,000% or not, I have no idea. But here's what I can tell you. First off, that's not a 20% drop. It's a 53% drop. Massive difference. If you're holding 53% drops and you're making a habit of it, that's playing with fire, because eventually it will not bounce. Eventually everything will go into a bear market and everything will continue going down for quite a while, right? Right now it's down over 31%. So much more than 20% when he made the comment. The other thing is, if you bought the exact bottom on this token the day that it was listed on Binance, right now you're up 900%, not 10,000%. I don't know if maybe it, if you bought it at the perfect bottom before it got listed, maybe on a DeFi, maybe then it's up 10,000%, but not very many people get to buy down there. That mindset of it doesn't matter because it'll go back up, that's what makes people go bankrupt. All right? What is this? Look, put it on a 4-hour chart. What is this? Well, this is obviously a descending triangle, right? Or you can call it a symmetrical triangle, descending triangle, whatever you want to call it. I don't care, right? Call it whatever you want. Descending, symmetrical, whatever. I was telling somebody in the Discord this earlier. I don't care what you call the shapes. I don't care whether it's symmetrical. I don't care whether it's a wedge. I don't care whether it's a rectangular range. I don't care. What I care about is consolidation, right? A market, this is Dow Theory 101. A market wants to trend. So if a market's going up and it consolidates, you should expect the market to break up. If the market's going down and it consolidates, you should expect the market to go down. If the market reverses trend, that's a huge red flag. For example, Shiba. Trending up, consolidation all through here. It should have broke up. It didn't. It broke down, and it broke down on volume. That's a huge red flag. So is this a dead cat bounce where shorts are going to load up and this is going to go down? I don't know. I can't tell the future. But technically speaking, this is an area people would normally look to sell, not buy that asset. Okay? You're a long-term investor. You play it however you want to. But the bottom line is going long in this thing down here is gambling. It's not trading. All right? Just like most people going long through here, they were gambling. They were sucked into the FOMO. I went and bought my wife a car day before yesterday, sorry. But I went last week to talk to the dealer, and one of the sales guys was literally asking me about Shiba, right? Which was a huge red flag. Okay, Joe Public, and no disrespect to him, he's actually a smart guy and he played it smart. He put a small amount of money in. He said, I'm not, if it goes to zero, I'm fine with it. This is a guy that makes 6 figures a year and put in $100, okay? But the point being, he was asking me about it, and I had another friend of mine who worked in the cable industry who had called me and asked me about it, and those are like major red flags. Like, okay, when the public is hearing about it, it's normally too late. So that was the whole point of my post, several days ago. Let me find it again. Was that when everybody's talking about the investment, that's typically a really bad time to invest. Like, okay, here is BMON, right? Back here, everybody was excited about BMON. BMON's going to the moon. It's going to make us all rich. It had ran up from like a penny, under a penny, all the way to almost 50 cents. And then it crashed. But when it crashed down to 10 cents, everybody over here who was super excited about it, 95% of them no longer liked BMON. They weren't talking about it. And then, of course, that was the best time to buy before it shot up to almost $1. It was like 90 cents. Everybody gets talking about it again. Oh, it's going to make us rich. It's going to make us rich. And down she goes, right? And again, while this is ranging sideways, the people that were excited to buy at 90 cents are probably not excited to buy at 19 cents, just the way markets work. All right? We'll go up a few more posts here. By the way, if you guys are not in the Facebook group, feel free to come join in. I stopped talking about the Facebook group a few years ago because I felt like YouTube was kind of restricting my reach because I was sending people to Facebook. But I don't know if that's actually true or not. I don't know where it's at. Okay, so here's a post on OMG. This was from yesterday, right? Same exact concept. Back in 2017, 2018, OMG ran up to almost $30. I remember buying OMG down around $6. I was one of the people that was new. I wrote it up. I didn't want to sell because everybody was so excited about OMG. And then I rode that OMG down and unfortunately kept catching falling knives on the way down, which is working out now versus US dollars, but not versus Bitcoin. I lost a bunch of Bitcoin on this. But, you know, people over here super excited, OMG, 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 right? Down here, oh, OMG sucks. It's a dead coin. It got delisted from some exchanges, right? It's a failed project. If you went to the Reddit, people were talking shit, right? But down here, you could have bought OMG for as little as 30 cents on some exchanges. It got down to 37 cents on Coinbase. So on Coinbase, from here to here, this ran up over 5,300%. Again, on other exchanges, it actually got down to 30 cents. So it ran up over 6,000% on those exchanges. But the thing is down here, where everybody's given up, this was accumulation, and this is where you wanted to be buying OMG. If you had, you know, you had a chance to 50x your money. So even a really tiny investment, like 500 bucks, right? 50x times 500 bucks, potential return of $25,000, right? Also, the other thing to notice about this chart, I had this line drawn on there, right? This is very, very basic stuff that I don't see that many people talking about. Monthly levels of support and resistance are extremely powerful levels and can almost always be played. Almost, okay? So last night this ran up to 1989. It actually tiptoed right up to 20 bucks. I actually shorted or sold some of my OMG. I did not short it in the case of going out and taking a margin short. I sold some of the OMG I was holding because it was my largest investment. And then today I wake up and where is OMG? Here's the same chart. OMG, there's that same level. Boom, OMG is down from 20 bucks to 17.21. It's about a 15% drop. So that means that I'm up 15% on that, you know, short sell. And now if I want to buy it back, I can buy my investment back. I can pocket the cash difference of what it would cost to buy back what I sold, or I can take the money that I got up here, the proceeds, and put all of the proceeds back in down here, and now I'll have 15% more OMG, or I can simply stay out. It just depends on how I want to play that. But the bottom line is, this isn't rocket science, folks. This is, hey, look, there's a line. People sometimes ask me, hey, James, what do you do for a living? And I'll say, I draw lines an 8-year-old could draw. And they're like, how does that mean? And I'm like, no, really, that's what trading is. You draw a bunch of lines that an 8-year-old child could draw, and then you follow those lines. And that's all trading is, right? You could draw a line down here on the double bottom, follow it over, and if you bought right here when it retested that neckline, boom. That's all trading is, okay? Now, one of the charts that I posted up on Facebook a few days ago, let me try to find the, yeah, here it is. So, speculation can only go so far before reality becomes undeniable. The sad thing is those buying the top will have lost interest now that it's dropped nearly 70%. Where would you rather buy? This is the exact same thing as Shiba and OMG, etc. You look at a chart like this, right? It was ranging sideways, this big range between about 30 bucks and about 60 bucks or so, 70 bucks even. It broke out, and now it's come right back down to retest that range. That is textbook market behavior. But the people who were very excited to buy Zillow stock at $200 a share will be far less excited to buy it $67 a share, even though one's obviously a much better investment than the other. It doesn't mean it's a great investment. It doesn't mean it can't keep going down. But if I wanted to own Zillow, I would start cost averaging in down here, not up here, right? And then if I'm wrong and it keeps going down, I could always buy more of it. And as long as the company does not go bankrupt, it's very hard to go wrong with cost averaging, okay? So that's another chart example. Here's another chart. Fern asked me about this stock today. So this is a company, apparently they have something to do with home gym equipment. By the way, we're gonna see more and more of these types of charts over the next 12 to 18 months because there has been massive speculation over the last 18 months. You have the government, and the US government especially, handing out, you know, trillions of dollars of quote unquote free money. You have people who were just straight up gambling with that money, and massive speculation led to a massive bubble, right? So now from the low in March of 2020 to the high in 2021, the stock ran up 866%. Again, ridiculous, you know, more than 80x the average return of the stock market. And of course, now the company's financials don't support this evaluation. The company's not making anywhere near enough money to justify $171 per share. So now the stock is starting to collapse, and it's down 67% from this top back here. And in the case of the stock, it's really bad news because you had all this volume support through here, and it's cut through that, and it's basically open air all the way down to about $36, and the bigger ledge is down around 30. So this stock could potentially be going much lower, another 33 to 45% before it finds volume support. Okay, but same thing, people who were excited to buy over here will be far less excited to buy this if it gets back down to this level, or this level down in this area. They'll be like, oh no, that stock sucks, it's no good. And it might not be. It might not be any good, especially a company like this, a gym-based, or excuse me, an exercise equipment-based company. People were locked down because of COVID, so they were buying a lot of gym equipment, so that pushed the price up, right? Pushed the value of the company up. Now gyms are reopening. Life is returning to somewhat to normal, and of course their sales are starting to dry up. This very well could be a company that ends up going, much lower, because fundamentally it just can't support the evaluation. We don't know. But from a technical analysis standpoint, I would much rather buy down here than up here. All right. So I don't know how long this video is. I'm hoping it's fairly short. I'd like to try to get down to these, I used to do these 10, 15-minute videos. That's really what I need to do, instead of making 45-minute videos that nobody wants to sit through, right? I can't sit through a 45-minute video. It's like watching paint dry. But overall, the bottom line is this: I'm not knocking any one investment. I'm not, supporting any one investment. I'm simply saying that if you want to make consistent money and you want to make the biggest returns possible, learn to identify zones of accumulation. Don't be buying needles, right? You're buying needle tops on this, and that's not typically going to work out real well for you, okay? If you bought back here in September when this got listed on Shiba, or Coinbase, excuse me, right? All it did was double top so far. Now, could it go up from here? Sure, right? But to give you an idea, when this was over on Binance, right? So it went up here, and yeah, if you bought up here, you're up now. That's great. You're up about 22%. It's not a really good investment, right? I mean, it is. At normal times, it's wonderful, but compared to the market, it's not, okay? All through here, that's your zone of accumulation, okay? And you don't have to be a rocket science or an all-star technician to figure out what a sideways range looks like after an asset drops 50 to 80% or 90% or whatever the case may be. So I think I'll go ahead and wrap up there. I'm sure there's lots more I can talk about. I could talk for hours about this stuff, but I hope you enjoyed it. I hope you get something out of it, and I hope that it kind of sinks in that markets do want to trend. You want to look for zones of accumulation, and for example, back here, you want to look for zones of consolidation. It's moving up, it's consolidating, it should continue moving up. It did when this broke out. You would have been perfectly justified to take a long position through here. Even though it's really up, it doesn't matter. Momentum says it should go higher. But then up here it consolidated, and instead of going up, it started to go down, and that's a major red flag. All right, all that being said, obviously I am just some guy sitting in a spare bedroom today, which means that nothing in the video is financial advice. You should always go out and do your own due diligence and seek out professional financial advice from a licensed financial advisor before making any type of investment in cryptocurrency, the stock market, precious metals, or the Forex market. If you haven't already, make sure to subscribe to the channel, make sure to give the video a thumbs up, and make sure to leave me a comment. The more comments I get, the more videos I will do. As always, this is James with Crypto Common Sense, reminding you to please trade safe.